Hey everyone, welcome back to the channel. Microsoft stock just dropped big time after the earning. What is going on? Is it the end of AI? Because now these big tech companies have one question to answer. Can they monetize AI? We're not sure about it. So in this video, we're going to talk about the latest financial results from Microsoft and also talk about their valuation, because maybe the reason the stock is dropping is just because it's just too expensive, right? So if you're new to the channel, welcome. My name is Nick. Nice to meet you. And in this channel, we basically talk about value investing to help you find good investment with the right price. So if you enjoy this kind of stuff, well, subscribe and let's dive right into it. Alright guys, let's get started. As I said in the beginning, Microsoft stock was down big yesterday after they released their earnings reports, and today the stock just keeps on dropping. Fine. Well, you can see a lot of articles on Seeking Alpha right now, like Microsoft down 6% on Q4 fiscal year 2024 earnings after Azure miss. Did the AI bubble just pop? I believe thanks to Microsoft's earnings, you can see this kind of titles like everywhere today. Right, and let's get to the, actual numbers. Well, double beats. You see, Microsoft's results beats on revenue, beats on earnings. So it doesn't seem too bad for now, right? And let's get to the actual reports from Microsoft, the company. One thing I want to mention is that Microsoft Cloud strength drives fourth quarter results. Fourth quarter. Okay, so guys, this is not the calendar year, this is their physical year, and this is their fourth quarter of 2024 fiscal year, different from our calendar year. Okay, just want to mention that, and let's get to the results. Where is it? Here we go. Okay, so 3 months and June 30th, and this is their fourth quarter again. Revenue up 15% year over year. Operating income up another 15% year over year. Net income and EPS both up 10% year over year. Okay, so it doesn't, again, seems pretty strong, right? And if you take a look at the full year results, revenue up 16%, operating income up 24%, net income and EPS both up over 20%. So again, really strong results. But the only issue here, I believe, is this. This is their segment results, and you can see Microsoft Cloud up 21%, really strong. But the issue is this. The issue is where they grow the most. Azure and other cloud services up 29%. So number-wise, we have no problem with this. But Wall Street, they're forecasting 30% growth on Azure. Okay, so it means they beat on revenue, they beat on EPS, but they didn't beat, they actually missed on Azure. As you can see on Seeking Alpha again, Microsoft slides amid weak Azure growth. So it seems like everybody, they're pointing fingers at the fastest growing segment in Microsoft, which is kind of funny. Like 29% is really good, but it's not good enough to meet Wall Street's expectations. But I mean, as a long-term investor, you should not be focusing on, oh, they missed by 1%, oh, they missed by 1 cent. That's ridiculous. If the company is on the right track, I think we are in good shape, right? So I'm going to stop right here for the segment results. And one thing I want to point out before we move on is their capital expenditure, because that has been what's affecting these big tech companies like Google, Microsoft, Meta, their free cash flow. Okay, because they're spending a lot on the infrastructure of AI, and that's why we have to kind of do some analysis on their capital expenditure. And as we can see on their cash flow statement, additions to property and equipment, this is their capital expenditure. And for this quarter, 13.8 billion of capex, and for 2023, the last quarter of 2023, 8.9 billion. So obviously Microsoft, they're spending a lot more than last year. But the good news is, unlike Google, Microsoft's free cash flow is still really strong this quarter. Like Google has already been affected like negatively, like obviously, right? But that's good news for Microsoft. They didn't let their heavy capex affect their free cash flow. Okay, so put that in mind, and we can now move on to the earnings call transcripts. That's a really cool feature on Seeking Alpha. You can try it out, and you can also listen to Mr. Nadella, CEO of Microsoft. But I think we're just gonna skip this part because the only thing you want to do with this transcript is just Control F, and you want to search some keywords like Outlook or guidance to see if management they provides any insights on their outlook for next year, right? But I mean, Outlook, nothing too crazy here. They still need to answer the question that can they monetize and how are they gonna monetize? When are they gonna monetize AI? Okay, so I mean, nothing too crazy here. And I really want to spend more time on the valuation today, so let's skip this part, guys. But before that, if you're interested in the bigger picture of Microsoft's fundamentals, then here it is. I mean, you really cannot say it's not perfect except for the maybe a little bit rich valuation, and that's what we're gonna do right now. Is Microsoft stock after the drop still expensive? Let's find out. If we head to Seeking Alpha and click on valuation, you can see they're assigning a grade F on their valuation. So obviously every single metrics is significantly higher than the sector median. But of course, Microsoft, they are the leader in the market, so obviously they deserves better valuations, right? So yeah, we can just ignore this and do our own analysis. Right here, we are comparing the price to operating cash flow, the price to earnings, and the price to sales. 3 important valuation metrics, and this is super important, guys, because on Seeking Alpha there is one cool thing: you can pull out the full history on any company, right? And this is super useful because you want to compare to yourself. You are your biggest enemy. You want to find the norm of a company's valuation. So let's take a look at the orange line, price to operating cash flow. Right now the number is sitting at 26.5, and interestingly, it is almost as high as when the dot-com bubble took place, right? So you cannot tell me Microsoft's stock is still cheap right now when you take this into consideration, right? Price to earnings, the blue line, again, right now is sitting at 35.8, and it is like really close to the dot-com bubble. So looking at this, Microsoft stock, even after the drop, doesn't seem attractive to me. Sorry. And if we move on to a website called Finance Charts, and this is also pretty cool. Like, they got the 5-year average of their EV to EBITDA, 10-year average, 15-year, 20 years average, and let's take a look at a 5-year average. Okay, 23.1. This is their 5-year average, and right now the number is sitting at, after the drop, 25. This means there's no multiple expansion opportunity for Microsoft, because right now the multiple is higher than the 5-year, 10-year, 15 years average. Okay, and lastly, we can move on to DCF, because they got strong cash flow, like pretty stably, so we obviously can do DCF on Microsoft, right? For the full year 2024, I mean, I should have changed this, sorry, 2024, 2025, and so on. You guys are smart enough to understand this. 74 billion in free cash flow, and I'm assuming they can grow their free cash flow for 13%, okay, annually for the next 10 years. Why? You can head to Seeking Alpha and you can click growth, and here's a EPS for long-term growth, 3 to 5 year CAGR. This is according to the analyst, 13.8%, okay, for the next 5 years. And I'm assuming they can kind of sustain it for the next 10 years. If this happens, their fair price would be $300, about that. And after the drop, the stock is still trading above $400. So looking at this, again, Microsoft stock is not, to me, as cheap as a lot of people thought, okay? Alright guys, that's Microsoft. And one thing real quick, okay? If this is the first time you watch my channel, then I want to let you know that I usually don't do any English content here. And today I'm just trying to have some fun and do something different, okay? And if you're my old viewers, and you're sick and tired of my English accents, please don't worry about it. I will be switching back to Chinese in the next video, so I promise you, okay? That's all. I hope you enjoy the analysis today. And if you do enjoy, there are a couple of things that you might want to do. Like you can smash up the like button. You can follow my Instagram, or you can click some links below, like Interactive Brokers. That's the broker that I personally use. You can go check that out. Or if you want a comprehensive course on value investing to guide you step by step, I got it for you. You feel free to visit my course website and see what I got for you. And if you're interested in joining us, please know that I have this 10% discount for my YouTube family. Okay, so if you need that, feel free to use it. That's all, guys. If you have any questions, leave a comment below, and I'll see you in the next one in Chinese. Okay, bye.